Also connect with Dipan Mehta to find out his views on the markets, individual sectors, and of course stocks. Hi Dipan, good to have you on board. We're all scratching our heads talking about this massive divergence that we're seeing within the banking sector and the rest of the market, in particular, for example, IT. No doubt some of the heavyweights have had it rough within the banking space, but there's been a 4% fall in the last 1 month at a time when the Nifty has done precious little. What explains this?
Good morning and thank you for having me on your show. There's only one explanation for it. You just have to look at the mid-cap index. It is just soaring and soaring. And we are seeing so many blue chip, good quality mid-cap stocks go to all-time highs of 52-week highs. So all the action is concentrated over there. And I think investors are focusing on companies which have delivered good set of numbers, where there's good earnings visibility and somewhat reasonable valuations, and focusing on those companies and bidding up the stock prices over there. Also, typically mid-cap counters are not that liquid. And with the way the money is coming into small and mid-cap mutual funds, as well as portfolio managers and AIFs, I think we are seeing concentrated buying taking place in select mid-cap stock, which is driving stock markets higher. But rest of the large cap stocks, the bank stocks are being ignored at this point of time. But this is a cycle, and it can easily turn, based on which levels one cannot say. But we have seen this cycle play out many times, money going from large cap to mid cap to large cap, as well as sector rotation. So these are all the characteristics of a kind of a strong bull market. And I think it's just a matter of time before this rising tide lifts all boats.
Comparison which I would like to do, and that is Aditya Birla Fashion, Arvind and Trent. All three have one thing in common: fashion. All of them are in a sense run by great families. The Lalbhais, Arvind, Tatas, Trent, Birlas, Aditya Birla Fashion Retail, ABFRL. But just look at the change in 52 week. Aditya Birla Fashion not done anything at all. Arvind still done better. But Trent, I guess, has been this consistent compounder. Now stretch it up in last 10 years. Let's do 10 years. Wow, 10 years. Yeah, that's a good comparison. 10 years, what has changed? And 10 years is a good time to understand that, how much stickiness you have to your fashion brands. In last 10 years, Arvind is up 63%. Yes. Last 10 years, Arvind is up 63%. Trent is up 14 times. And put it Aditya Birla Fashion Retail. Why am I bringing it up? Because Trend has made a new high yesterday. That's why I'm bringing it up. And let's look at Patricia. Let's look at Aditya Birla Fashion Retail. There you go, 32% up. So, Dipan Mehta, 10 years ago, everyone said Trend is expensive. They continue to say the same. And for those who said that Trend was expensive, what have they missed? They've missed a multi-bagger in last 10 years. What's happening in Trend?
Yeah, Nikunj, good morning, and thank you for this fantastic analysis. And for the record, we are also trying to analyze 10-year returns of stocks in this earnings season. And really, it's a revelation. Stocks which were expensive 5 years, 10 years ago as well have turned out to be multi-baggers like Trent, or at least have delivered compound anywhere from 15 to 30% type of returns. And I think this exercise is important, because today the biggest deterrent to buy into a good quality business is the high price to earnings multiple. And if you have the history that even 10 years ago, 5 years ago, expensive stocks are still delivered, that just ends up building conviction in buying good quality businesses. If you look at the track record, that's the financial track record of all the three companies you named, you'll clearly see that Trent has been consistently compounding on its earnings and have strategically, I think, grown their business. They have entered into new brands like Zudio, which have done exceedingly well, which is into value retailing. The balance sheet quality has been exceptionally good. They are generally avoided getting into inorganic kind of growth opportunities, especially acquisitions. And they have created a lot of value in subsidiaries. I think Zara is a very huge success story for Trent. And mind you, some amount of valuation in Trent is coming from the joint venture and the subsidiary companies per se. But at these levels, I think to get into Trent, I'm not so sure, because there's a limit to how much valuation you can pay also. But I think if the price earnings to growth, the PEG, is around about 2 times or so, then I think even if the PE multiple is high, you will still get a return on the stock. And one more stock I would like you to add to the list is Shoppers Stop. And I think what the management has been doing over there has gotten away a bit unnoticed. because you look at the last 2-3 years performance since the new CEO has taken place, the entire business has been reorganized. They are focusing on private labels, they are focusing on cosmetics, and the performance has been pretty decent. And I think from a valuation perspective also, it is quite reasonable. I'm not suggesting recommending shopper stock. It's just that it's one of the companies which has been quietly moving up last 2-3 years on the back of a very sound financial performance. It had been a bit of a trouble, but clearly it's turned around and entering into a new growth phase.
That's interesting analysis on retail. Let's get interesting analysis on BHEL. That's the stock on the editor's radar today. Firstly, Nikunj, what a move yesterday. And the stock has gained the most in the last 2 years. And of course, the order inflow has been strong and a lot of other levers.
When I saw the stock, I took my glasses out like this and I said, okay, am I getting too old? It is actually BHEL which has gone up 10%.
Yeah.
Look, BHEL has been a consensus sell. And the reason why it's been a consensus sell is because they've really not got anything right in terms of the migration, where other private companies, they've really managed to take a giant leap forward. BHEL has not really done anything which could be called exciting, rather than, and even though they have a huge advantage in terms of they have access to a lot of government orders. The Vande Bharat order also was more like a compulsive order where they've got the order but margins are just not there. Now, given that what changes are happening in the entire power space, especially in terms of the battery storage, where large investments would be moving in the areas of pump storage for power, everybody is hoping that BHEL, given that they have an advantage and they do have a technological presence, they will be able to crack the code. Now, there is a little bit of storytelling which I think has started in the power sector, especially when it comes to battery and especially when it comes to storage. Capability, ability and delivery. Capability, ability and delivery. So, I think BHEL has capability, they have availability because they are a government company, but can they deliver? I don't know. My limited point is that the existing business is not great enough for the stock to stay even at 100 rupees. But if they are able to change the complexion of the business, which some companies have done in the past. We've seen a lot of PHU companies, how they've morphed and how they've migrated. Can BHEL really execute the new complexities of the business in terms of battery storage and energy storage? If they do it, then trust me, BHEL becomes a very different kettle of fish. But I guess there is a bit of a hope, maybe a hype. I'm not challenging their ability or capability, but I would wait for the delivery.
Okay, so question is this going to be a turning point now for BHEL, Aisha? And that's something that we need to watch for closely.
Oh yeah, we absolutely do. Kunal, some follow through after that mega move yesterday on BHEL?
Well, I believe that the stock should see a rise substantially from current levels as well. Yesterday there was a huge jump in terms of volumes for BHEL. The stock managed to take, or zoom past about the 100-105 mark, which had been a resistance of sorts. I think in July as well, the stock had taken a pause at 104 or 105 levels, retraced back towards 95-96 mark. And this time around, the stock has given a classical breakout, making the stock back towards, I think, a 3 or 4 year swing high. So momentum is on its side for BHEL. Volumes have made a comeback. I believe that the stock should see a decent follow through on the upside. I would expect 115 to 120 as the next set of target range for BHEL with a very, very near term.
Dipan Mehta, there was a time when BHEL was like the go-to stock. It had become the Navratna. But it has really been a lost decade for BHEL. They have not really managed to migrate up in terms of where the private sector is. Now, there is a belief that BHEL is ready to do what other PSU companies have done in the last 2 or 3 years. They are changing tracks and they could have a long and a strong, formidable presence in the energy storage space. Do you think this time around BHEL can actually deliver?
See, Nikunj, I think per se the biggest risk factor in PSU stocks is execution. Be it banks or engineering companies, service companies, across the board, the biggest challenges are execution. From that point of view, I think BHEL also has not been the best in terms of execution, even when they had the order book position going, partly their fault, partly, environment where there were delays in projects for various other reasons. And now I think that we are seeing a fantastic build up in the capex cycle. Companies like BHEL, which have the spare capacity, which have the technology, which have been more or less pre-qualified for many projects and orders, are getting the true benefit of it. So I think that from valuation perspective, from near-term prospects, also medium-term prospects, certainly there is a trading opportunity in BHEL. And with the kind of momentum that is in the stock, I'm sure the stock can rally easily by another 10-15% or so. But I wouldn't like to invest in BHEL in the longer term. Our preference is for good quality engineering companies in the private sector, and with disclosure that we and our clients are invested, companies that would fit that criteria, like Larsen & Toubro, Praj Industries, VA Tech, Wabag, SGEC, ISGEC Engineering. And what's the common thread? I think great track record, good management of the balance sheet, high return on capital employed, and some good quality work which they have done. You could add ITT cementation also to that list. So from that perspective, our focus is more on good quality businesses which have stood the test of time and which are still available at reasonable valuations.
I'm going to just shift gears, and Kunal, go back to Escorts, all-time high.
I think it's an exceptional performer. Last 5 odd days, the stock has rallied up, I think, 200 points. I was actually looking at 2500, 2550 as a zone for Escorts, but the stock has now migrated towards 2900, 2945, where the stock closed yesterday. Excellent momentum, great volumes for the stock, and the chunk in the last 4 or 5 days of volumes is almost, I think, 5x or 7x the volumes in the last 7-8 days when the stock was consolidating at this 2500 mark. So, I think it's just an exceptional move for Escorts. Month after month, quarter after quarter, we've seen the stock performing, seeing a lot of participation, consolidating time and again, and then moving up higher by, in a very short span of margin by 10 to 15%. So, exceptional chart for Escorts.
It's up 30 times in 10 years.
Yes.
30 times. 30 guna ho gaya 10 saal ke andar. And this is not like
That most names would be.
No, Aisha. I mean, which auto company has done 10 times, even 10 times in the last 30 years? I mean, the exception there would be Eicher. With the exception of Eicher. What's interesting here is that Eicher, between 2000 and 2010, Eicher and Escorts did nothing. And 2010 and 2023, Eicher, not even 2023, between 2010 and 2022, that was the golden period for Eicher. You think about it, Mahindra & Mahindra, these companies are very old companies. Tata Motors, these companies are very old companies. It's
But
just
the revival has just happened.
Yeah, you sometimes hit that patch in that business curve where you become from unknown to unforgettable. And very few companies actually go through this kind of a transition, like Shree Cement. It was there. You always knew that Shree Cement was there. The management changes, the outlook changes, and then a cement company in last 20 years, which has turned out to be a mega multi-bagger. I think Shree Cement is one of them. We'll actually establish that. There you go. Eicher in last 10 years, 10x. Escorts in last 10 years is up 30 times. Maruti must have done nothing, 10, 12 years. And similarly, I don't think if you look at Mahindra & Mahindra, that kind of a relative outperformance is there. Dipan, sometimes we look at the stocks and we say, okay, we know it existed, but after 5-6 years, you realize that they've just taken a giant leap forward. Escorts, Raymond's, Tube Investments, CG Power. Now, in markets, Dipan, there is no point in reading history books. What I'm doing is, that's part of my job, is to talk about history. But you are the guy who can tell us about future. So tell us the next ones now. See, I have an easy job. I can talk about history, right? I can get away with it.
I spoke about so many companies. You talk about a sector and I'll give you ideas, not recommendations. Investors can do their own due diligence and buy. We spoke about capital goods and I gave at least 4 or 5 good stocks in which we and our clients have invested, and I would say, you hold them long enough, 3 years, 5 years, 10 years, who knows, they could turn out to be multi-baggers. And the key thing about this thing, Nikunj, is that when you invest in a stock, don't think it's going to be a multi-bagger. Just hope for consistent earnings. And I think if companies can compound earnings by even 17-18% or so for extended period of time, then you have a multi-bagger on in your investment holdings. And this is true of the last so many stocks that I've seen for the last 10-15 years or so. So the critical thing is to just remain invested and ride through the turbulence, because these are not dead products. They do not have a kind of a simple secular cash flow. There are ups and downs. And if you ride through these cycles, then certainly if the business quality is good, then India is such an amazing country that wealth does get created.
Since we're talking about the auto pack, Dipan, Nomura has come out with its latest note on what some of these, new bike names are actually up to, right? So with all the Harley Davidson, hullabaloo around it, the Triumph this thing as well. And of course, the Hero tie-up as well. Nomura is saying that, good model finish, more metal, limited plastic usage, and most of these bikes from be it a Triumph or be it Hero, they're actually seeing 5 to 10 bookings per day. Wanting to understand whether it moves the needle for Eicher in the long haul or not. Because the numbers are minuscule right now, but yes, disruption surely is at play for Eicher, which has had monopoly in the space, in the premium end bike space for now.
See, I think every success story is going to attract competition, and and that also works for Eicher Motors. So, on the whole, yes, its market share certainly will dip. It's got 3 or 4 new competition coming in, but doesn't mean that Eicher Motors growth rates will suffer. I don't think so. I think that if they can easily consistently grow at 15% type of revenue top line for the next several years or so. And the main reason for that is that the entire transformation is taking place within the two-wheeler industry. And what Eicher offers is a kind of a lifestyle product. It's like a cult product, which I think the others will take many, many years to come to that. They have a huge export opportunity which they can explore. Eicher Motors themselves is ahead of the curve when it comes to launching new motorcycles, and all of their recent launches have been huge successes. They have the pulse of the consumer. They are in the right segment, that 250 to 350. And mind you, all the competition has come beyond the 350cc segment. Valuations are reasonable. So I would like to place my bets on Eicher Motors as amongst the top pick within the two-wheeler space. Again, disclosure, we and our clients are invested. And when you see this kind of wealth effect in the country, this urbanization taking place, increased consumer spending, availability of finance at attractive rates, then typically we are seeing a huge transition from the commuter biking segment to the leisure biking segment, where Eicher Motors is the king.
Dipan, but I have a slightly differentiated thought here, and let's just supplement it with your point. Whether it is right or wrong, we don't know. But the leadership of Eicher for the first time could come under threat because of what Bajaj is doing, and given that there is a real threat which is coming from Harley and Hero. So markets know that your leadership will come under threat, and when typically markets know that your leadership is coming under threat, the P multiples can compress. So the company may do well, but suddenly the P multiple will get challenged. Isn't that a real threat for shareholders?
See, first of all, this is just some minor competition, and it will be many quarters before they can make a sizable dent and have pressure on the volumes of Eicher Motors and start to impact their strategies. What makes the success of a good auto company is distribution. It is brand building. It is consumer following. It is the quality of the models, how fast you refresh those models. There are many moving parts. It's not an easy business, to say the least. And market shares are fine, but shareholder returns are determined by secular growth in earnings. And just because some competition has come doesn't mean that Eicher's secular growth in earnings will get impacted. Our bet would be that the entire market expands rapidly, and on the whole, I think Eicher will be able to maintain its growth rates. Sure, even if the price to earnings multiple remains stable, then also I think it's perfectly fine, because Eicher can compound earnings per share by 16-17% or thereabouts. And that kind of a returns I'm pretty happy with. I think, if earnings per share goes up by 17% for next 5 years and the P multiple goes nowhere, I still have a winner in my portfolio.
Vaishali, I'll talk about a stock which normally does not pop up, but in terms of traders, they love to associate with the stock, and that's TTML. Big move yesterday. Do you track that one actively? Vaishali, TTML, Tata Teleservices.
Yes, actually, yes. I think this is a good trading bet, because yesterday we saw, first round of good buying happening, good volume. And I think this stock is looking positive, because, these were all the laggards and now they have come into action. So I would say, yes, this can go towards 100 levels also. It makes a very favorable risk-reward trade, because we have seen a long consolidation, nothing happening in this stock. So I would say that, yes, 76 should be held as a crucial support level. And once we see a further candle coming up over here, I think the target ready for this is 92 to 100 levels.
Kunal, TTML, the ring of TTML, something which I think was discussed extensively in COVID times. Every day एक stock ऊपर जा रहा है, कुछ हो ना हो TTML ऊपर जाता था.
Yeah, I think the stock in COVID times, I think moved from some 7-8 rupees or 3 rupees or 4 rupees to 300.
100x.
Yes, 100x.
In 2 years. Biggest multi-bagger.
Yeah, but I don't track the stock.
Why? Biggest multi-bagger you missed.
So there are a lot many better options in the market. So
What else is popping up on your screen?
So from the PSU pack, GAIL is something which looks attractive. That's a stock which I think at 115 mark looks to be a good trading bet. BEL is something which you've been bullish on earlier. NTPC has managed to break past above a breakout as such. So many of the PSUs, the non-banking names, are the ones which are actually popping back on the radar.
Okay, that aside, some of the stocks that have had a pretty terrific run over the last 1 month, and we've been highlighting REC, so that stock has definitely been a smart mover. A solid 50% gain almost in the last month is what we've seen. There's been Adani Power as well that has charged through, about knocking on the doors of about 350. The stock has gained about 40% plus in the last 1 month. IRFC has been a smart mover, keeps on the gainers radar, and Godfrey Phillips as well has been another one, and smart double-digit gain in excess of 30% on a Godfrey Phillips as well. Have you had a look at the charts of any of these, Kunal?
Well, yeah, Godfrey Phillips is something which is interesting. That's a stock which I think has managed to come back after months of consolidation. There was a phase for Godfrey Phillips when the stock underperformed, its immediate pure ITC to a larger extent. I think 1700, 1500, 1550 was the consolidative zone for Godfrey Phillips, and the stock has moved past about those levels quite comfortably. I think on the way up, it's managed to break past above its 200 moving average by a decent margin. And I think right now the stock is almost at a 20% divergence from its long-term moving average, which probably comforts the trend and manages to absorb any kind of a short-term volatility. IRFC is also something which has been very interesting. Been tracking the stock over the last few months from 35, 38 levels. When this move started off for IRFC, the stock, I think at one point last week or so, the stock was almost at 50, 52 levels. So again, it's consolidative now. The history suggests, historical charts suggest that the stock gets into at least a 1 or 2 months of consolidation before it migrates to a higher level. So I think 45, 44 could be a good zone to buy back IRFC.
Okay, that's the GIFT Nifty, by the way, indicating a mild bit of upside for us. Dipan, I don't know if you've gone through the Economic Times article which is reporting, source-based. When it comes to Torrent Pharma, they're looking to buy the Hamid family stake in Cipla, and that they're working with JP Morgan. They're going to compete against the likes of Baring PE, Blackstone as well. And they are looking to form a consortium with PE funds. The discussions, of course, are at a preliminary stage. Wanted to understand what this could mean for both Torrent Pharma, because this is going to be a large, sizable, meaningful, reputed acquisition at that, if they were to pick up, Hamid family stake in Cipla, and what it would mean for Cipla minority shareholders as well.
See, I think from Cipla minority shareholders, the more people in the fray to buy the Hamid family stake, the better it is, because there will be an open offer and, fresh value can get discovered. So I think it's great news. Cipla is one of the most outstanding pharma companies in India. And the fact that it has got so many suitors, I'm not surprised at all. I think the winner will certainly get into a very good quality company. And whenever we have seen change of management like this, it has worked positively for shareholders. Look at what happened in JB Chemicals and even then Unichem. So I think all the acquisitions which have taken place in the pharma industry have been very positive for both the acquisition, the acquirer, as well as the acquired company. And they have been able to, unlock a lot of synergy. So I'm very positive on this particular development in Cipla. Being a shareholder, again, a disclosure, we and our clients are invested in it. And clearly, I think, the more players come in the fray, the better the chances. I would be a bit worried for Torrent if it was trying to acquire it by itself, because that would become too much for it to chew and would certainly lay a great deal of stress on the balance sheet of Torrent Pharma. Or it would lead to a lot of earnings dilution or equity dilution for that matter.
10, 11 stocks, and I think 7, 8 stocks you own. How many stocks do you own, my friend? Or is it just a coincidence that all the stocks we're discussing, you somehow own them?
No, Nikunj, we follow a very, I would say, safe strategy. And in my portfolio, I may have as many as 100 stocks as well. Positions may be small, But as a matter of disclosure, we need to disclose that some of them are trading positions as well. So from that point of view, we have to disclose it. And mind you, I hope all the stocks that I am telling you that we and our clients are invested, the common thread is good quality. I think that's the mantra. Quality businesses at reasonable valuation. That's not my mantra. That's Warren Buffett's mantra. And I think if you put it into practice and patiently invest for 5, 10 years, then you will get multi-baggers like Bajaj Finance, PI Industries, Tata Elxsi. Who knows? I think these have been great value creators, and have made the real difference between an ordinary portfolio return and extraordinary portfolio return.
I'm sharing this point for our viewers because I've learned it last couple of days that if you look at the template of Indian markets, 90% of market participants, they have time frame of less than 1 year. 5% have a time frame of 1 to 3, and less than 2% market participants have a time frame of 5-year plus. But 5-year plus is where you can hunt real multi-baggers because the businesses, they become from great to, from small to big and from big to large. That's where I guess the magic of compounding and the magic of scale, ability, and the market share gains they happen. So Dipan Mehta, let's wrap it up with one final question. I'll call this as Dipan Mehta's 5-year plus basket, where you would say I've got these 2-3 names or 5 names in that 5-year plus basket where I don't care about what happens to the election cycle next year. I don't worry about what happens to Fed interest rate. I don't worry about the quarterly performance. I don't worry about what happens to valuations. Those are my 5 coffee can stocks where I'm happy to own them for 5 years, and something seriously has to change in terms of the business proposition for me to turn a seller.
Oh, you are now putting me in the spot. To name 5 stocks is a big challenge.
Maybe three.
You have
So,
100, Dipan. I don't think that should be that difficult.
No, see, there are so many disclosure requirements, but with a lot of I would say again, I would like to mention that these are not recommendations, and investors should do their due diligence and buy these stocks. But what we feel are good emerging growth stories within the banking space. We like IDFC First Bank. It's been our favorite in the banking sector, and clearly, I think it would be a great compounding story. Within the engineering space, we like Praj Industries. It's a quality player. And with the way we are seeing the trends towards environment and environment-friendly fuels, clearly this company has an edge over there. When it comes to software, we are very positive on Tata Elxsi still at these levels also. It remains amongst the best performer. And although it's been a great value creator, I still feel that the best years are ahead of Tata Elxsi. Maybe not in terms of growth rates, but certainly they can scale up from these levels also. Within the auto space, we have discussed Eicher Motors still remains our top bet over there, and we are not at all rattled by the competition which has come in. It comes and goes, and clearly this company has gone from strength to strength. So 4 names for you as we speak. And I think within the pharma space, although we haven't invested, we are very impressed with the way Mankind Pharma is shaping up. It's just I want to get a right entry point where there's some margin of safety. It's amongst the most richly valued pharma company. So this is an idea which we are tracking closely, but we haven't yet invested. At some point of time, we could look at investment in Mankind Pharma as a measure of disclosure.
Okay, super. I think we eked out more than 5. So thanks so much, Dipan, for being candid and, of course, sharing with us your market outlook as always.